Hey everyone, good day. I am extremely excited to announce that two seats are already filled in the Consultant Financial Bootcamp that starts on September 4th. So this is right after the holiday, right before year end. So I'm extremely excited that I'm able to help as many consultants as possible to keep more money in their pocket and keep more money in their life so that they continue to build a long-term financial strategy for themselves, for their business, and for their family. Today, it's going to be extremely short. I just wanted to go ahead and clarify some information that I provided yesterday and make sure that I make it as clear as possible regarding the tax deferred versus tax free. So yesterday I talked about some of the issues that consultants, that I shared three financial strategies that consultants basically aren't able to take advantage of. And one of the things that I posted about is that, they defer too much of their income, and that's a big mistake that they're making. So to clarify that information is, when I was talking about tax deferred versus tax free, tax deferred means that you don't pay the tax now and you pay it at some point down the road. While tax free means that there's no tax now, there's no tax down the road. Or, you may have to pay tax now in some cases based on what you're doing, and then you don't pay any taxes on that same money or that same investment down the road. So what I meant by, they're deferring too much of their income, because a lot of consultants, their only strategy is using the tax deferred, whether it's an IRA, whether it's your SEP, your self-employment pension plan, or it may be a solo 401k, and that there are several other plans that are out there. You have the profit sharing and several other plans that enable you to increase that bucket of money that you want to defer. The IRA, it's a pretty small amount that you can put in it. The SEP and the solo 401k, those are the two that you can put way more money in it. The solo 401k gives you more of an advantage than the SEP, because the solo 401k does have your business doing some matching contributions and so forth. But the problem I wanted to identify is, if that's your only investment and tax strategy that you're using, that's basically put all your eggs in a tax deferred basket. And the point that I wanted to drive is to also ensure that that you have an exit strategy. Hi Diane, thanks for watching. That you have an exit strategy. And what it means is that now that you're in business, now that you may be raising a family, now that you're maybe looking at other investments, that's the time that you're going to have the most deduction. So whether you plan to retire, or what your long-term financial goal is, or what's going to happen down the road, if you see a pattern where you may have less to write off down the road, then all those tax defer, you may take it out at a higher tax rate. We don't know what the tax rate may be in 10, 20 years. And then the thing is, in these plans, when you pull money out, you also get hit with a 10% penalties. So you have to pay a penalty plus a tax if you take the money out before that age requirement. So it's basically not a lot of flexibility. So what you want to do is have a combined strategy where, yes, you're doing the deferral, for the retirement income and all those things that you want to defer for, based on Kim Lowe, how are you? Based on what you plan to do in the future, and also have income or some other investments where that you can balance the effect, meaning that you have some income that may be tax-free at that point when you pull it, or you have activities going on where you can increase your deduction on those activities so that it can offset the effect. So that's what I mean by having an exit strategy, to make sure that you're not going to be pulling out the money at a higher tax rate down the road. So if you're a consultant in a fast growing business, the one that I'd recommend would be the solo 401k, just because you get to put more money in it. But also think about, what other investments that you can put your money in that's going to either create deductions for you down the road, or going to create some tax-free money down the road. So at least when you get the tax-free money, you'll be able to pay the taxes on the income that you defer. So it's more having more of a balanced approach. It's what I meant to deliver yesterday. So I'm not saying that it's bad. I'm not saying not to do it or anything, based on what your long-term goals are. You just have to make sure that you have a balanced approach. You're not deferring. Deferring is not the only strategy that you're using. If it's the only strategy that you're using, that you have some kind of exit strategy, so that you'll be able to exit at a lower tax rate, because the key is to be able to lower your tax rate now and also lower it in the future. And one other thing to think about is flexibility. How flexible is a plan? And this is the reason why I would more recommend the solo 401k, because at least you can borrow money from it. If you need additional cash flow to put in your business or something, you can take a loan from a solo 401k. You can't do it from some of the other plans. So make sure that you look at some of the things that you want to do in the future, so that once you start putting money into these plans, that how flexible they are, penalties, tax impact, and combine all of them to see which one is right for you. So for that, that's it for now. And as I mentioned, that 2 seats are filled in my consultant financial bootcamp that is starting September 4th, right after the holiday, right after you relax for the holiday and started to head into Q4 and started head into year end, to get all the tax strategy, all the cash management strategies that you can start implementing in 2018 and also start implementing in 2019 as well. So if you're a consultant and you want to start implementing a long-term financial strategy for yourself, you want to increase your profit margins and your cash flow, you want to find hidden cash in your business, and also you want to maximize your tax saving, protect your business from the IRS, then send me a message. We'll chat and I will provide more information. In the meantime, have a good Thursday evening. Thank you guys for watching, and we'll talk.